right, our next guest says he sees a pullback ahead for gold, but agrees that $1,600 an ounce is probable by year end. Spencer Patton is founder and chief investment officer at Steel Vine Investments. This is an option selling hedge fund which invests almost exclusively in commodities. He is joining us now from Nashville, Tennessee, where he tells me during the break that the heat index is 115 degrees. That's just a little fast fact and a complete aside, Spencer, before we start. Great to see you again, by the way.
Thank you for having me on. I appreciate it.
So let's talk about gold. It's up almost 10%, right, in less than 10 days. I mean, is this another flight to safety trade? Do we expect a trade-off, but you still think we're going to end at $1,600 by year end?
Yeah, you know, gold is a great measure of sentiment because when you get gold lifting like it has, it's showing that we've had a lot of fear in the last couple days. You've got the reemergence of the euro crisis. You have this debt limit debate that is really scary. And I think anytime you get kind of those peaks in fear is a good time to take some gold off the table. And so I think gold has a lot of good fundamental story going for it. I think there's a whole lot of reasons to be bullish, but I would not be buying right here. I'd look for an opportunity to buy a pullback, maybe around 1,500 or even 1,450.
Do you think we're going to see that pullback before year end?
I certainly do. I think that when we get a resolution to the debt debate, if it's any reasonable solution, I think that we'll see the gold trade come in quite a bit because that would be a positive step. Hopefully, that we're reducing our deficit. So I think that might be a catalyst for a gold pullback.
Spencer, let's talk about oil. This is another big commodity that's a real indication of both the health of our economy and the sort of the future, at least the near-term future, of how our economy is going to be shaping up. Do you think we're going to get to that $100 per barrel?
I do. I think we're just around the corner. I mean, we're $3 away. Crude oil is up another $1.50 today. And I think it just shows that the release from the Strategic Petroleum Reserve was really a failure. I just don't think the administration was thinking straight when they tried to release less than a day's worth of crude oil onto the market to try and keep prices in check because we're already higher than where we were when they released it. So I think that we're probably going to be moving higher from here, especially if we get any economic recovery.
How much higher do we go, and is there a catalyst that pushes prices back down?
My expectation is that we'll be around 110 to 115 for crude oil. I think that we'll test once again that $4 per gallon gasoline range. I think what would push this down is if the administration comes out and calls for a raise in the margin requirements for the people that are trading crude oil. I think that would deal a 10% blow in a single day to the crude oil market because there's so much speculation going on in the market. So I think if the brokers made people keep a little bit more cash for every contract of crude oil that they trade, we'd see a big hit, and that would be positive for the U.S. economy.
All right, we saw that with a couple other commodities, silver in particular. I'm thinking of earlier on in the year. All right, Spencer, stay cool. Always good to have you on the show. Appreciate the insight. That was Spencer Patton of Steel Vine Investments joining us live from Tennessee.